Hello, and thank you for joining us today. I'm Taylor Combluzzi, a mining analyst at Red Cloud Securities. Today's webinar features Oroco Resources. Oroco is focused on advancing copper and gold projects in Mexico, and its flagship Santo Tomas project in Sinaloa hosts a large porphyry copper gold deposit with 4.5 billion pounds of copper equivalent in the indicated category and 4.1 billion pounds of copper equivalent in inferred resources. In August, they released an updated PEA outlining a 22.6-year, two-staged life of mine open pit mining operation with a post-tax NPV 5% of US 1.4 billion, as long with an IRR of 22.2% and a payback period of 3.8 years. Today, with me on the webinar, we have Ian Graham, who's the president at Oroco, along with Craig DL, who's the executive chairman. The format of today's webinar will be comprised of two parts. In the first, Ian and Craig will provide an introduction to Oroco, and then in the second, we'll take your questions live. So please use the chat to submit your questions, and we'll get to as many as we can. I'll note that you can type your questions in at any point throughout the webinar. To start, I'll handle the disclosures and then turn it over to Ian and Craig. So for Oroco Resources, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Oroco corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Oroco Resources specific disclosures. So with that out of the way, I'll turn it over to Ian and Craig to update you on Oroco Resources and what you have to look forward to with the story.
Thank you very much, Taylor, and thanks for joining us, and good day to all of you who have come in presently, and also to those of you who might watch the presentation subsequent to this. So we're thrilled to be able to give you an introduction to our project. I will skip through these. Thank you, Taylor, for taking care of them, and bring us to what we believe are the investment highlights for our project. And in essence, Santo Tomas is poised to be a very large, low-cost copper project with great access, infrastructure, etc., and also offers very significant further resource upside. So as Taylor suggested, our August 2024 PEA delivered us a very compelling NPV of almost 1.5 billion US dollars on a plus 22-year mine life against a very strong capital in CapEx, $1.1 billion that gives fantastic leverage NPV to CapEx. The study was done at a base $4 copper, and it was performed on a large resource of 4.7 million pounds of copper equivalent in the indicated category and an inferred resource of a little over 4 billion pounds. So a very significant economic outcome. And the real key to the project is its low elevation, its ready access, it's adjacent to grid power, a high-pressure gas pipeline operated by TransCanada, and access to the deepwater port of Topolobampo that has handled copper concentrates in the past and presently, and has excess capacity to handle further copper concentrate. Santo Tomas is well located geologically, and it sits in the Laramide district that characterizes the southwest USA and northwest Mexico, and it's one of the world's more significant copper production provinces. So in 2023, 1.5 billion tons of copper was produced, and that was a significant proportion of global copper production, 6.5%. And the district is mature. There's been production from the district over a long period of time, but we're seeing some very significant newer projects in the region, including Santo Tomas, and long-term projections are that the district will grow in copper production to exceed 2 million tons a year, which would take the district to 8 to 12% of global production projected for around 2040. And Santo Tomas is one of the significant projects in that district. So a very compelling situation, and our location in Mexico, well-known mining economy. It's a large copper producer already, and Santo Tomas, during its life of mine, would generate plus $20 billion in revenue, with approaching $5 billion that would go into community tax, etc. It would generate plus 600 full-time equivalent jobs at the mine, and a multiple on that of indirect full-time equivalent job generation in the municipality of Choix, where we're currently located. So we would be more than doubling the number of full-time jobs in formal employment categories than currently exists in the district. So very, very compelling project. And it is this employment aspect that has gained the attention and support of local and federal level politicians in recent times. Oroco has spent Canadian 70 million advancing the project at Santo Tomas, starting with geophysics, a significant number of drill holes, and a program that rescued the remnants of 75 historical drill holes, giving us a strong database. We've built a number of camps on site, and we've done all of that to a standard that we believe prepares the project for participation by major companies, either in joint venture or other circumstances. So we've tried to maintain a very high health, safety environment, and very particularly community initiative. The project offers fairly substantial expansion potential proximal to the known mineralization, and a great number of opportunities adjacent to the current resource. Focusing on the current resource, much of the Phase 1 program was focused on the North Zone, and I shall try to indicate that for you here. So we were focused in the North Zone, and then the other component of the resource is in this area here, the South Zone, and we'll be referencing those zones going forward. An upside opportunity and discovery of extended mineralization at the Brasiles Zone offers immediately adjacent resource expansion potential. So this view, looking at the North Pit as developed in the PEA and the South Pit with the drill hole traces and copper results shown, gives you a strong sense of the drilling density in the North Pit. This is where the predominant component of the resource is in the indicated category. Moving to the South Pit, the resource is predominantly inferred, and the further drilling that is planned in the Phase 2 work focus will focus on South Pit. We also have the opportunity to develop some resource in the so-called pillar zone between the two pits, and this will have the advantage of lowering overall mining costs and strip ratio against the current plan. And we have strong indications of resource that are geophysically indicated at this point, southeast of the South Pit. And we've done sampling in the area that it currently lies outside of the planned pit development that has given us 0.4 copper in surface samples. So we anticipate the resource to grow some, and also for the status of South Pit to be elevated to indicated. And this would permit us to move forward with a mineral resource estimate that would have most of the resource in the indicated category, and would allow the reporting to a PEA standard in the future. So the PEA that we did brought us an NPV8 of $1.48 billion and a strong IRR at 22.2%. And if you view the lower right area of the table, you'll see the price assumptions and fundamental exchange rate assumptions in the study. Also of interest, one of the features of Santo Tomas is we can bring forward some of the higher grade into the early years of production from the North Pit. And so we maintain a plus 0.51 copper equivalent production profile for the first 7 years. And that particularly helps with the compelling economics that the project offers. Again, an initial capex, 1.1 billion, offering us a very strong NPV to capex ratio. And just a little detail, the C1 cash costs at a little over $1.50 a pound of copper, and the more fully burdened C3 cash costs at $2 a pound copper makes this a project that would sit in the lower half of the cost curve for copper production when compared with 2023 cash costs for copper production, as generated annually by the S&P Global Group. The advantage of the early high grade is reflected in the project cash flow profile shown in this slide, and the rapid construction, the build of the project, because of the ready access to the site, really does help the project economics. And we see an expansion generated here, allowing in year 7 that would bring an expanded throughput going from 60,000 ton a day to 120,000 ton a day, commencing in year 8. So how does Santo Tomas compare with other undeveloped porphyry copper projects globally? So this graphic, this bubble chart, ranks the projects just in order of the measure of capex per ton of average annual copper equivalent production. So the average annual copper equivalent production number is the average from the project studies. Some of these studies are, like ourselves, PEAs. There are a couple of pre-feasibility studies and feasibility studies included in the comparison group here. And what we see for Santo Tomas is that for $10,164 odd per future average metric ton of production is what capex is required to be invested. And so as we compare ourselves with the constellation of other undeveloped projects, we see that Santo Tomas offers a very compelling capital efficiency. So in the words of our CEO, Richard Locke, he believes Santo Tomas is one of the most capital efficient, large scale, low cost and independently owned copper projects globally. This is a similar treatment of the capital efficiency of the project, but here we're looking at the net present value divided by initial capex. So what net NPV return does the projects generate from its initial capital? And again, Oroco shows a very, very compelling situation at Santo Tomas, where the NPV exceeds the initial capex, and by a fairly healthy margin. So 1.34 is the ratio. And when we stack that up against other porphyry copper projects globally, a similar constellation to the one just shown, we see where Santo Tomas ranks. And this on the vertical axis is the same measure as was shown in the previous slide. It is the NPV over initial capex. But here on the horizontal axis, we're plotting the IRR, internal rate of return, for the various projects in the same group And again, we see that Santo Tomas offers a very compelling IRR with a very compelling capital efficiency. A little bit about the company. We've got just over 250 million shares outstanding, fully diluted. We're approaching 300 million shares, no debt, and market cap a couple of days ago of 90 million Canadian. We're covered by Cantor Fitzgerald, Matt O'Keefe there. Certainly, you can have a look here, our share price performance over the last year. Over the last month or so, we've had some very significant positive news and support coming from the federal and state governments here in Mexico, and they have declared in print press, in social media, their outright support for the project, and they're encouraging us to, as rapidly as possible, move into environmental baselining and preparations to longer term start permitting this project. And so that news, we've had a little bit of a headwind in the markets just recently with uncertainty that we've seen out of the US, but already our recovery has commenced. The team at Oroco, management and board team shown here, definitely a group of people with deep experience in the business. Craig, who's on with me, has some 35 plus years, been involved in developing companies and moving mining projects forward within those companies. Richard, a project developer in mining and in natural gas plant builds, and formerly with Rio Tinto for a substantial amount of time. And I met Richard when the two of us were together on the Diavik project, which was developed and built by Rio. And the others in the group here, all deep experience. David Rose, our corporate secretary, has a particular role, has been played in bringing the project into Oroco historically, and that was done with some detailed legal work that enabled the company to acquire the project and repatriate the rights to the project to its original and rightful owner, who did the deal with Oroco to deliver us the project. So we'll focus on some near-term catalysts for the company. The recent political support coming from the federal senator, former senator and now congressman for Sinaloa in the federal government, has seen the Santo Tomas project being added to a registry at the Ministry of the Economy, headed up by the undersecretary who is responsible for foreign direct investment into Mexico. The new regime and president has made a focus foreign direct investment into Mexico, and she has directed the undersecretary for foreign investment to solicit and maximize foreign direct investment into Mexico. And so we've been added to a list of projects that are regarded as needed by the country. And those projects are selected by their economic potential, but more particularly for their ability to advance social causes in Mexico. So rural economic advancement, the generation of good employment conditions in the regions in which they operate. So we're thrilled that the Santo Tomas project has been recognized as one of the candidate projects within the country to move the economics forward. And we are the open pit porphyry copper project of choice as selected by these political representatives. So we're moving forward and will announce shortly the environment baseline studies that prepare us for a future environment impact assessment. And that is a fundamental document required to move the project forward through a number of steps, but most particularly towards development. We'll be recommencing the resource drilling focused on South Zone, as I previously referenced, and we'll be upgrading inferred resources there to indicated. We also have some of those exciting opportunities along the trends we previously defined. So there'll be a little exploration drilling, and we're very hopeful for some good news to extend the resource with that work. And we will also be doing a little bit of geotechnical drilling work that will help underpin a PFS level study. And so we'll be preparing through certain trade-offs and other optimization opportunities to refocus some of the technical work to develop a PFS level study. And we're looking forward to doing such things as reprocessing the geophysics that we already have in the context of the work done in phase 1, and to help us with improving targeting and getting our exploration efficiency up, and also looking at some of the newer technologies in the IT space, such as AI, to assist us with that. So we're going to load just quickly an animation that attempts to summarize the PEA fairly quickly. And thanks very much, Catherine, for loading that. And I will try and voice over comment some of the items to watch here. So our PEA, as we indicated, was released. This is the site and location from the early slide. Again, focusing on the phenomenal infrastructure support coming through the gas pipeline, the power infrastructure, and the port. The PEA itself was a detailed document, as PEAs go, and really focused on the North Zone, which is the item closest to you in the view, and South Zone a little further away. And what you see in that image is the shallow, near to surface outcropping nature of the resource. And so here you see the resource pits and some of the site layout and principal facilities as envisioned in the PEA. Very, very compelling. All the facilities are proximal to the pit development in naturally ready-made areas for such things as waste dumps and tailings facilities. This is the tailings facility as envisioned, that cyclone sands facility. Here is the crushing facility right adjacent to the pits. And this is the process plant. Another view of that. So that will be expanded, as we indicated in year 7, to the view you see here. Yen tailings, and that is proximal to and west of the, east of the principal pits. Tailings treatment, some of the water management features that will sit at the toe of both tailings and the waste rock stockpiles, and then some of the ancillary facilities that will be sited, again, proximal to the development. And a map here of the power lines feeding off the national grid, so a very modest extension of the national grid power required to support the mine. And again, just an overview of the development. And in particular, that illustrates the lack of strip, the very, very low strip ratio bulleted here. That results from the fact that the resource sits on the ridge in the Santo Tomas location. Yes, so that concludes the overview of Santo Tomas, and Craig and I are happy to take questions. Taylor, certainly I'll probably answer more of the technical ones, and Craig's available to review some of the corporate questions and perhaps market-related questions that we may receive.
Perfect. Okay. So yeah, we'll turn to the Q&A portion of the webinar now. Just a reminder to everybody on the line that you can type your questions into the chat or the Q&A chat as well. So we have a few that have come in here. I'll start with the first one here. I'm wondering if there are any suitors showing interest in the company now that the Mexican government is bullish on moving the project forward. Maybe just provide more context around kind of those movements lately with the government and what's been achieved lately.
Would you like to take that one, Craig?
No, that's fine. I'll respond to that. I think it's important to understand that what the government has done is essentially just declare their intentions. But I think it'll take some time for that to truly filter out in a way that people start to see the results. And so specifically, I think, and I'm just going to react to one particular entity, and I can name it Santo Tomas. They've said to us they want to see the permitting process actually happening. In other words, they want to see specific progress that they know will lead to an end result. And I think that's a reasonable perspective held by many entities that would otherwise be expressing interest today.
Okay, perfect. And then in terms of, I guess on the ground, have you seen much movement in terms of permitting yet with the new administration? Have there been any, is it unlocked permitting yet, or is that still kind of ongoing as you described?
I think there are 27 permits of different nature that have been issued in the last short while. Am I correct, Ian? Something in that range?
That's correct. And quite compellingly, companies submitting environment assessment reports. In other words, they have done the work in the past, prepared the report, but withheld advancing the process for the last several months or year. And we're seeing them submit their reports now, which says that they are identifying a fundamental pivot in the disposition of the government to properly re-engage the past and existing process in Mexico. So we're seeing really good signs and indications that the country wants to move mining projects forward, and what we're really watching for is the continued acceptance by the government and granting of a variety of permits. So they're a little bit in catch-up mode, but we are seeing that happen. So it's hard to express, Taylor and others, just how compelling we regard the current situation. I'm down here at the project site with some of the team, and we're focusing on accelerating our environmental baseline work and essentially sort of booting back up to work at speed.
Perfect. Okay. So we have a couple questions relating around the PFS, both in terms of, how much funding you would need to complete that, and then kind of potential timelines and what that would look like.
I'll speak to that. I think that the best estimate that we have at this time is that it would be approximately a $20 to $25 million Canadian dollar undertaking. I believe that it's reasonable to state a 12 to 15 month timeline from the time it's funded until such time as the PFS is actually completed and available for dissemination publicly. Is that a reasonable estimate on your part, Ian?
Absolutely, Craig. I think that's that would be a good. Those would be our targets, and I think given the experienced team we have, we can deliver on that.
Right, and that would, I would assume, it would include the infill drilling that you would need to do.
Yes.
Okay. So again, I guess, is that kind of getting that funding to get the PFS work going? Is that also the same funding that you would need to start the drills turning again?
Yes.
Okay. Let's see here. And I guess, given the where you stand now in terms of the positive signs from the government and authorities down there, I assume you're still coming up with your timelines on getting everything going. Do you have any more detail for investors at this time, or is that kind of a work in progress right now?
I might take that. I'm down here because Craig dispatched me with what's the word, Craig? Certain urgency to get us kicked off as soon as possible. So we're finding the right people with the right skills. We're putting that together, and we're going to get going as soon as possible. And the other thing that we've expedited and will shortly be ready is a desk prospectus, which will give us a large flexibility in near-term financing this phase 2 component of bringing Santo Tomas forward. So, from my own perspective, I'm absolutely thrilled with where we are. The headwinds we were feeling perhaps a little earlier, and in my view, are gone. We've got the wind is behind us now, and there's a focus across the board, across the company to get going.
Okay, and then just on the permits again, do you have any indication at this stage, given the number, the 27 permit applications or permits you've seen go through lately? Are those, is there any indication on timelines? Is it as to what you could expect, or is it reasonable? Or
so what we're being told by the political supporters is that we will follow the sort of the normal procedures, and we'll do that we'll follow the rules, as it were, but they are indicating that we will be processed expeditiously at every stage of our moving forward. And honestly, Taylor, when you look at how quickly, the first visit by the congressman to Vancouver happened a little over a month ago. He said he'd have us in Mexico City within 3 weeks. He had us in Mexico City 9 days after he departed Vancouver. And we had a series of meetings with the Ministry of Finance, essentially the Secretariat of the Economy. And 2 days later, we were in Sinaloa and Culiacan with the governor. And there were a series of meetings in between, and we were also brought to business leaders. So there is an industry government coalition of the top 40 largest businesses in Sinaloa. And we met with those folks right before we met with the governor. So it's been, the support has been remarkable, Craig. I think you'd agree. It's everything we've wished for, and our duty now actually is to respond to that by accelerating the Santo Tomas project through the proper channels.
And I think, Taylor, it's important to note that this process isn't quite as simple as just flipping a switch. In other words, the senior politicians would be changing the overall direction and intentions of the government in the sense of the overall policies. But for these policies to filter down through the bureaucracies that exist below them, it has been acknowledged as being less than a reliable process. In the past, what has happened is the opinions and perspectives of the previous president, Mr. Obrador, were understood by key decision makers within that bureaucratic process. And they would literally sit on files that should have otherwise been advanced as a result. And that's where the stagnation was occurring. And the political influences now have acknowledged that unwinding this this mentality, so to speak, will take some time. But they have established themselves, particularly with this registry of priority projects, as being a circumstance whereby if we do encounter that kind of stagnation, they will step up and resolve the problem, as long as we're performing within the guidelines established by their mining regulations.
Perfect. Okay. Yeah, sounds like you want to the things they want to move things back to a more predictable and kind of by the book procedure for this.
Exactly.
That's correct.
Perfect. Okay. Okay, and then we just have a question. Just wondering what what permits you would need to apply for to go forward.
So I might take that one. There's a number of permits that run through the development, from explosives permits, waste management permits, etc. They're detailed in Chapter 20 of the PEA. And I'm not ducking the question, but we have tabled all the permitting and the requirements there. And so anybody looking for detail might refer to that. But it is a sequence, and it's something that mining projects in the past have taken care of in Mexico. And so we have a very good map through that process. And now essentially we have the, shall we say, permission support to start to engage that process.
Yeah, no, I think that's fair. There's a long list of permits, so you can't go through them all. So
that's correct, and they're detailed, as I say, in Chapter 20 of the PEA. And you know, I think it's well mapped. And now that we have reliable support politically, I think the bureaucracy, as Craig said, it's got to gear up and get more accustomed to doing this again. But the roadmap is fairly straightforward.
Perfect. Okay. Maybe let's turn to drilling. We got a question here. Which areas will the phase 2 drilling focus on? Primarily South Zone. Any plans to poke a few more holes in Brasilis?
At this point, the focus will be resource. But of course, you know, we'll see how we go and perhaps look at a bit of exploration. But I think the focus will be to try to keep the exploration as proximal to the pit development that we currently expect as possible.
Perfect. Okay. And then another question here, wondering about for the PFS. I guess what are your thoughts around how you would structure the financing for the capital you need for that PFS, the 20 to 25 million? I mean, there's multiple options out there. So
I think realistically, we have to look at this in stages. I don't think any of our shareholders would want to see us step out today and look to secure that amount of financing at these current price levels. No matter what we do, it'll likely be tied in one form or another to our current share price. And so I think that what we ideally want to achieve is, on a short-term basis, focus on generating a specific response with respect to our permitting process, and continue to build off the political support that we've been able to realize so far, and use that to encourage a market response, which would then allow us to do a more significant financing, more specifically related to the drill program at a subsequent date. The full permitting process is a 2-year timeline, roughly. And so it'll be quite easily accommodate a drill program that's set somewhat in the middle of that timeline, which means that we don't have to raise that 20 to 25 million immediately. And we can work in the meantime to I think, essentially restore the confidence that the market would have in the fact that this overall project can be achieved. And the permitting process, of course, is the critical ingredient to that. I think there's enough evidence today as to the value of the project. It's just a matter of generating that reasonable certainty that the project can be developed. So again, the financing can be done in stages.
That's right. And to that end, we prepared the shelf prospectus, because that provides a 25-month prospectus that can be engaged as required
in increments
to finance. So I think we have significant flexibility in how and when we finance, and our intent is to sort of do that in a way that maximizes value for shareholders.
Perfect. Okay. I think we've gone through all the questions here, so I'll put out a final call for questions to the audience. Maybe, while we're waiting for any last questions to come in, either Ian or Craig, if you want to give a quick sum up of the opportunity for investors, or final thoughts you want to leave people with.
Well, I'm sure we might both do that. As a technical person, I think what we have in Santo Tomas is a fantastic commercial opportunity with a high value project, and I think that it's fairly straightforward. We're a single asset, and I think folks should be able to readily determine where the value opportunity might sit. Certainly, from my perspective, I think we're in a wonderful situation, in particular with the recent political support and the tailwinds we've received. And Craig, I'm sure you'll have a more market-specific view to that.
Well, my concern these days is primarily that our shareholders understand that the dilution that's obviously required in order for us to accomplish the end result being a PFS, that it's truly a circumstance whereby the value today is considerably enhanced in a manner that is a multiple, literally, of the value of the project today versus the value of the project at the time that the PFS is completed, such that the dilution necessary to get there is extremely limited on a proportionate basis. And this dilution concern has been raised on a number of occasions, particularly of late, speculating as to the degree of dilution that will be required to facilitate the PFS. But the reality is that that dilution factor is nominal in comparison to the value creation that results from those raises.
Perfect. Okay. I see a couple of questions that came in, but I think you addressed them kind of in the wrap up, and a couple others we talked about earlier in the Q&A, so I won't rehash them. I encourage those people to look back at the Q&A replay and see the answers there. So we'll leave it there for today. So I'd like to thank Ian and Craig from Oroco Resources for taking the time to host the webinar today with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.
And thank you, Taylor. And thank you all for attending.